Hey everyone, in this video I'm gonna look at Procter & Gamble's most recent earnings report with the perspective of answering the question, did Procter & Gamble's dividend just become safer? So right now, as of this recording, Procter & Gamble pays a dividend yield of 2.35%. So if you're interested in investing in Procter & Gamble for its dividend yield, this video will be perfect for you because I'm going to talk about if that dividend yield just became safer. All right, so let's begin by looking at Procter & Gamble's most recent earnings results. So um, before I start with the actual figures, let me just back up a little bit and highlight what Procter & Gamble was going through entering into this quarter. So one of the bigger risks facing Procter and Gamble is um, from rising inflation. So rising inflation is expected to cost Procter and Gamble around $2 billion this year. So that's one part of it. The other part is in response to that rising inflation, Procter and Gamble has put in several rounds of price increases, increasing prices on its own portfolio of products so that it can offset some of the downside from inflation. So the risk heading into this quarter with consumer balance sheets kind of shrinking and getting further away from the times when we had stimulus money and inflation really pinching consumer budgets because now they're having to pay more for food and gas and rent and all of that. So that's leaving less money in people's budgets for premium products. And Procter and Gamble sells premium products, right? Procter and Gamble's portfolio consists of premium products. So if you go to a grocery store, you can find a lower priced version of whatever it is that Procter and Gamble is selling. So heading into this quarter, the big risk for Procter and Gamble was that consumers would be switching down. Instead of buying the Procter and Gamble product, they would be switching down, buying the lower priced version. So let's keep that in mind as I head into discussing the figures from this quarter. So overall revenue increased by 4% in Procter and Gamble's third quarter compared to last year, and that increased to 20.1 billion. Now, when I say third quarter, I mean Procter and Gamble's fiscal third quarter, which just ended, right? So this is the earnings results that came out today, April 21st, even though it's Procter and Gamble's fiscal third quarter. I know it's annoying. Companies don't always have the same calendar year quarter, right? So instead of it being first quarter, it's the third quarter for them. Earnings per share increased to $1.37. That was compared to $1.33 in the same quarter the prior year. So far, so good, right? They increased revenue and they increased profits despite feeling that pressure of higher inflation. So in this quarter compared to last year, the company's prices were on average 10% higher than in the same quarter the prior year. 10% higher on its portfolio of products. As a result of those price increases, unit volume decreased by 3%, which was pretty good, right? You raise prices by 10% and unit volume only fell by 3%. That means that Procter and Gamble has pricing power. It exercised its pricing power and it's demonstrating that pricing power to investors by showing them, look, we raised prices and people only decreased their purchases by 3% year over year. Pretty good. Um, Gross profit margin improved by 150 basis points year over year. That was driven by the 400 basis point improvement from higher prices and 210 basis points of productivity savings. Those are offset, of course, by inflation, right? 270 basis points of higher commodity pricing and 190 basis points of negative product mix. So people uh, buying when you think of negative product mix, you could think of instead of people buying the single packet units of Tide detergent, they were buying the bigger packet units of Tide detergent. And of course, when people buy the bigger bulk sizes, they pay a lower price per ounce. And so that's lower profit margin for Procter and Gamble. Whereas if people buy the single package size, it's a higher price per ounce, higher profit margin for Procter and Gamble. So a bit of a trade-off there. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. And finally, the company raised its 2023 revenue guidance to up. It now expects revenue for the year to be up 1%. Previously, it thought revenue would be down 1%. So a net 2% improvement from where it thought revenue is going to go. And the company reiterated the earnings per share growth of 2% at the midpoint for the year. I would not be surprised if after the end of the second quarter, I'm sorry, if at the end of the fourth quarter, earnings per share for the year are actually higher than what Procter and Gamble is estimating. Overall, to answer the question, did Procter and Gamble's dividend just become safer? I'm going to say yes, and that's because it reduced one of the big risks it's facing right now by demonstrating that consumers are not trading down that aggressively to lower priced products, and that they were able to pass along higher prices without experiencing a significant decrease in unit sales. And so this has been several quarters of this for Procter and Gamble, demonstrating that they can exercise their pricing power, and that should reduce the risk of a significant negative impact from inflation. So overall, yes, now Procter and Gamble's dividend is a little bit safer than it was before these earnings were announced, and that could partly explain why the stock was up following the earnings announcement. All right, thank you so much for watching. I really appreciate your viewership, and I hope I'll see you again sometime soon for another one of my videos.